Welcome to the Daily Brief, where I'll go over the highlights in the market for Thursday, August 25th, and then briefly discuss how things look for Friday, August 26th. Now, I am posting a full-length daily video, so I'm just going to hit the high points here, no charts, anything like that, just the talking points. So if you want to see a more in-depth analysis of what's going on, please watch the full-length video. So let's go back and talk about what happened. We ended up being up 1.41%. It was a pretty solid day. We saw most of the gains come late in the day, but volume was still below average. The technicals are showing a lot of improvement in the short term, and our scenarios, our setups, our sector rotation, they showed some improvement both on Wednesday and on Thursday, but the markets are still fixated on inflation and interest rates. We have the whole list of geopolitical concerns, earnings that will be released, and then the recession debate that's going back and forth with everything. So we had a narrow range until right near the close. Could that be the beginning of an upward movement? If you look at the daily chart in the full length video, sometimes the smart money will get a little bit of a head start. Doesn't mean that's what's going to happen, but sometimes that is what happens. We were able to regain the 20-period moving average, and we're right at the 200-day exponential moving average. There's a lot riding on Fed Chair Powell's speech in Wyoming that he'll be coming out with at about 10 a.m. Eastern time on Friday. The sector rotation and our positive setups, they're showing some improvement right now. The 10 to the 2, the 10 to the 5, they're still inverted. Interest rates in stocks and oil in stocks and the dollar in stocks, they're going pretty much in opposite directions right now. A little bit more normal of what we were seeing when the market was looking more healthy. Also, fear and greed is neutral. We're not extremely fearful, not extremely greedy at this point. The reports that came out, jobless claims were at 243,000. They expected them to be 10,000 higher at 253,000. And then the revised GDP, which is not really that influential unless it's really big, it was actually revised up slightly to be down 0.6%, where the one that freaked everybody out, that was down 0.9%. But the deflator, this is what's measuring more the inflation, what's going on, it was revised up to 8.9%, where it had been at 8.7%. Our trend is still positive, but it's weakening. It's below the moving average and declining. And we kind of had a quick cross. It crossed over negative and then crossed over positive. So it's a little mixed up right now with just which trend is it trying to pick up on. Because we've had 2 up days, I've switched the bias to positive. But because of the negative backdrop that we're seeing right now, I've still kept the momentum at mixed. All right, so then what's our outlook then for Friday? The short term is really showing some improvement. Can it follow through into Friday, where the intermediate term is more mixed? Sentiment continues to be neutral. We have the PCE, this is a biggie, and as well as personal income and spending that will be coming out. And we have the advanced international trade, retail inventories, and wholesale inventories that will be coming out. Not a huge report. The PCE, that's the biggie. That's another measure of inflation, and the Fed really likes to use that. We're also going to be getting the consumer sentiment final reading, and then all the different reasons that we continue to talk about, with the Fed speak kind of taking the forefront. Now, anything else can always happen, but the way it looks right now, Chair Powell's going to be giving a speech, and that's what the market's really going to fixate on. Our scenarios, we're still kind of going with a down scenario. We can make a case for that because of all the different headwinds. The technicals are still pretty much mixed, but we can also make an up case because we've seen some improvement now, but the technicals are still mixed overall. Our scenarios, our rotation, our setups, well, we need to see some more follow through with price. The technicals, we were able to get back above the 20. Can we get back up to that 200-day simple moving average? Maybe not in Friday, but soon. And unless you use the ADX in a little more aggressive manner, you're probably not seeing this as a sideways market right now overall. So our conclusion, it's turning negative, but it is showing some improvement. The short term is negative with some improvement still coming, as well as weakening in the intermediate term. And it's also showing a little bit of improvement. And then long term, we're still negative overall. So thank you. Please check out the full length video if you want a more in-depth analysis and commentary. And I'll talk to you again in the next video.